Welcome back to SSON's Invoice and Payment Automation Digital Summit. Naomi Secor here with the SSON, and I am really pumped about this next session. Our speaker is really bringing it with tremendous energy and is here to answer your questions. We are going to talk about how to buy an AP audit solution. This session is hosted by our sponsor, OpenEnvoy. And just before we get started, a couple of housekeeping items to make sure you get the most out of this session. So OpenEnvoy has provided some great content resources for you. So if you go to the resources tab, you're going to see a couple of additional items for you to pick up, including a white paper on why RPA is the answer to your accounting problems. We want to make this session very engaging. So if you do, at the bottom of your console, if you can go to that Q&A tab, that's where we're going to ask you to put your questions in. We're going to answer them throughout the presentation. And any questions that maybe we can't get to, we can follow up with Matt directly following the session. So with that, I'm really pleased to introduce Matthew Tillman, who is the co-founder and CEO of OpenEnvoy. Matt has spent the past 20 years building machine learning software in finance, advertising, and logistics for the world's largest brands. OpenEnvoy is a fast-growing AP automation company. The solution audits every invoice before you pay, automating costly finance workflows that prevent billions of dollars in wasted spend. And Matthew has had success both as a founder and a venture capitalist, where he's invested in hundreds of companies. And so I've placed his full bio and his contact details right there for you on the console. I encourage you to get in touch. Let's jump right into it, Matt, with all the practical guidance and no nonsense on how do we choose the right AP automation solution. So welcome, Matt.
Thank you so much for that introduction, Naomi, and thank you to everyone for joining the conversation this morning. I am thrilled to be here. I think this might be a little bit different than some of the other webinars that you're used to seeing. My background, just to, again, to reiterate on what Naomi said, is for 25 years I've been building automation software in the financial space, logistics, and media spaces. And in each one of those instances, I was personally either buying or building a solution to provide some of the services that we all think about when we think about AP automation. And in particular, around invoice auditing, invoice reconciliation, because without invoice reconciliation, you don't have good data for which to train the rest of your systems on. And so this is going to be actually a personal story about how I went about evaluating companies in the space that were providing invoice reconciliation, invoice auditing services, and AP automation services. What I learned in the process, and then how I actually evaluated them and eventually, decided to start OpenEnvoy. This is not going to be a sales pitch, though. It's going to be mostly a personal story around just some of the trials and tribulations of trying to find a high quality solution in this space. So with that, quick overview of the agenda. We're starting out with understanding the different eras of financial software, which is really important to kind of have a grasp around and context around, going into what AP automation really means, and then eventually how to figure out the right technology that's right for your organization, and then also how to measure that technology to ensure that you're getting the most out of your purchase, out of your dollars. And as Naomi mentioned, feel free to ask questions the entire time. We're happy to service those as they come in. So first of all, understanding sort of the lay of the land, the industry, if you will. I mean, I've been around for quite a while, and in the early days, it started with taking information that you receive via paper, statements, or bills, receipt of goods, et cetera, contracts, and getting that paper into large databases. And then we kind of moved on from that to taking the data that we just sourced from those, classically paper sources, whether they be paper or some other EDI system, some other legacy system, pulling that into a database and then making decisions based on that. This is the marketing term for this is robotic process automation, but you may have heard of this as being called two-way and three-way match if you've been in financial ops for a number of years. But what we're entering right now, which is really exciting, is this sort of future of finance, this ability to take all the data and all the decisions that we've all made, the rules that we've built in our financial practices, and automatically make decisions in real time based on that data, that information. This is something that's happened in other industries, and this is just now starting to get to the CFO suite. And so it's a really exciting time to be in this space and to be evaluating vendors if you're looking at bringing those solutions in-house. The thing that's really interesting about it, though, for me, is that this started with bringing data into databases, and we all coined the term actionable insights. Everybody wanted actionable insights. It's where BI tools started to proliferate. You started to see large BI providers become a mainstay in the enterprise. And then Finance 2.0, I mentioned robotic process automation. The reality is robotic process automation is a marketing term. And it really means that you're extracting data from a reliable source of information, usually human input in reality. And then you're running a number of rules on those, on that information that you would normally run manually if you were just looking at this as an AP team. I think everybody generally understands that about RPA, robotic process automation. It also, of course, created a marketing term, RPA, which everybody, both in the technology world and the finance world, loves acronyms. But if we dive into what RPA really does, it's a rules engine. Two-way match, standard two-way match, standard three-way match that you've probably heard of. A three-way match, in case you're wondering, is where you take the bill of goods received, the invoice that you've received from the vendor, and the contract, quote, or bid that produced that in the first place. And that could be contract, quote, or bid, or a purchase order, depending on your stage of financial technical fluency in those organizations. And so it matches all that information and determines whether or not it's a true match. So these are all forms of robotic process automation. It's not the most complex thing in the world, but rules engine just doesn't market as well in reality. And so one of the rules that after you do your three-way match and your two-way match, one of the rules that everybody talks about, and I've said in so many of these vendor pitches, and inevitably in the vendor pitch, they get to where you can manage your thresholds. And the threshold is not exciting. The threshold is this particular team is only allowed to approve this much in expenses. This particular vendor always overbills like by $5 or $10. We're just going to let it slide because the cost of disputing it is too high. And so what you end up with is something that sweeps a lot of what typical RPA vendors call low-hanging fruit under the carpet because it's just too expensive to deal with. And so this is very common in the industry. It's very common in finance generally. But the problem is your financial department actually looks like this, which is you've got many vendors. OpenEnvoy works with, multi-billion-dollar companies all over the world. And I think that's the case for a lot of these larger vendors. So your actual organization looks like this. You've got data sources coming in from every angle into an AP team your AP team is obviously not going to grow linearly with your business. And so you've got more and more vendors, smaller and smaller units of inventory per vendor, and fewer people in your AP team. So it is chaos. And you're usually looking for some way to make sense of that chaos. And traditionally, you're going to look at what are called RPA vendors or financial AP automation vendors. And then you're going to realize that all of this difficulty, all this complexity creates complex workflows, manual processes, et cetera. And every vendor is going to say how they can help you achieve, a better environment for your CFO suite. And we're going to talk a little bit about not just how they pitch that, but what that industry landscape looks like. So when we talk about the future of finance, we're not talking about, actionable insights. Actionable insights means we give you the data, you make the great decision with that data. We're not going to talk about RPA, which is basically, simplistic rules engines, quite honestly. We're going to talk about how to take that information, that data, those rules, and in real time, perform a full financial audit, perform payments for straight-through processing purposes, and ultimately how these systems are starting to make decisions on behalf of their customers. So here's a quick poll question for everyone. The thing that we learned in the very early days of OpenEnvoy was that just how the landscape actually works and how AP teams are trying to solve some of these problems, because the AP teams are obviously tend to be overworked. And so I was trying to figure out how many invoices are actually audited around the world. So what does that number look like? And so conversely, how many are never audited, right? If you think about the trillions of dollars in global trade. So how many invoices are never audited? 11%, 34%, 73% unsure. So we'll give you guys 10 seconds or so, I'm told, and then we'll move on to the next slide. But this shows you just the magnitude of the market, because any one of these numbers times the trillions of dollars in trade is actually a big number. Right? And Naomi, you can ping me to move on.
Yeah, I think we'll give everyone another 10 seconds here, and then we will see what the response is.
And so as we come up to the next slides, we're going to talk a little bit about how this works in practice, how we're able to look at the market and understand who's providing what value-added service, and then who's providing, workflow and the use cases to help you achieve these results. So it looks like, and I see the results are in. Can we go ahead and share them, or is everybody seeing this, just to make sure?
You can share them.
Okay, great. So the results are in, and those of you that said the larger number are correct. It's actually startling just how much of global trade goes unaudited. But if you think about it practically, it makes sense, right? It's a massive undertaking to be able to, as a human, look at every single contract, every single invoice, every single statement of work, every single quote or bid. It's impractical for the world's largest companies to be able to hire that many people within their operating margins to be able to solve that problem, and especially solve that problem accurately. Right? So here's the next slide here. So the reality is these Gartner numbers, we found these very early on in the company and realized just how big of a market it is. 73% of all invoices are never audited. It's just, everybody knows that there's a mountain of gold there, but it's very, very difficult to mine that mountain of gold. 30% of those invoices have at least an error, right? And 90% of those errors favor the supplier. Most of the time, not intentionally. Right? Suppliers have a hard time tracking in terms of their AR as well, and calculating AR, and complex contracts are inherently complex and difficult to manage. And so we looked at this space and said, this means the majority of the data in the space can't be trusted. So that means every system of record on the planet, every source of truth, large ERP implementations, as expensive as they are often wrong, as it turns out. Now, they may be wrong in favor of the customer or the vendor, but no one knows. And it's only as good, your systems, your later downstream processes, especially in artificial intelligence and what we call as engineers machine learning. It's really important that you have high quality, what's called test and training data. And that comes from your ERP systems. Hopefully, high quality training data comes from your ERP systems. So we look at the AP automation use cases. You look at what you're actually trying to achieve as a person. If you were to be given an invoice, a contract, and a statement of work, you can sit there and you can take a couple of hours to look at every single line item that came in on one of those invoices. And we're talking about, our customers have 150, 200 line items per invoice, maybe 12 to 14 invoices per document in reality. And so you're performing that manual task, that repetitive manual task, and you're trying to find accidental surcharges, just human errors, right? You'll have invoices with scribble across the top. I worked, at my last company had $13 billion of global trade flowing through it, and everything from Congo cobalt export into China to, grain out of the Midwest. And so there's a lot of handwriting that takes place, which is very difficult to get an accurate understanding of at scale. Duplicate invoices, about 8% of all invoices are duplicate invoices, not intentionally by the vendor. The vendor just has a process and a way of sending those in that generates duplicates for the customer. And so currency fluctuations, there are a lot of pain points in this particular space. And all of these, the result of all of these, is a very difficult, complex challenge to evaluate how you even solve these problems. And so we kind of look at, when we talk to our CFOs and our controllers, our CFOs and our controller customers have a lot of anxiety around making a decision in the space. How long are they going to be attached to the decision? How do they know the decision is actually going to work? Their new vendor is going to work? How do they know that it's going to solve those use cases? If you think about the complexity of the network of their vendors alone, they have no way of understanding, visually how those networks are related to one another. Those vendors are related to one another, how their customers are related to their vendors. It's exhausting. So I always tell them, the classic Serenity Now from Seinfeld, just take a deep breath and think about your most common pain points. This is what most vendors call low-hanging fruit. It's the easiest, quickest wins. But the thing that's interesting about easy, quick wins is they don't really solve everything. So thinking about your finance team, and I think it'd be great to just understand the variety of people that we have on the call, which of these, this is a quick poll, which of these are your biggest pain points internally? Like, what are the challenges that you run into most often? Line item level errors. So that's, a product line item isn't calculated correctly. The quantity is incorrect. Accidental surcharges. We see this all the time in the shipping industry. You see, there's an Angolese export surcharge that got added to a customer's bills for many years, and that customer was paying it. And it was really just extra margin for the shipping lines. There was no pass-through cost there. They didn't have to pay the Angolese government any more than they did previously. Lack of compliance and human errors, super common to have your contractual compliance not even close to attached to your invoice or even your ERP system. Sometimes that lives purely in legal or within those department heads and is never attached to your payment system. Which means your AP team doesn't actually know what professional services discounts you've already negotiated. So that's kind of contractual compliance. Duplicates obviously are really big. And then currency fluctuations. I've had the great fortune of working internationally from day one in multiple companies now. And because global trade usually involves multiple countries, which means multiple currencies. Even contract manufacturing in the US for CPG companies, as an example, is still going to have some amount of currency fluctuation. And understanding that can make a real difference. You might think to yourself, well, it's maybe $10 on an invoice, but if you're processing billions of dollars worth of invoices, a billion times anything is a very big number, which is great to see. So I love the results of this particular poll, and Naomi, if it's okay, I'd love to share the results of this. We can talk through this. So this is something really common. We hear this a lot: duplicate, overlapping, or cumulative invoices. Vendors send cumulative invoices because it's very easy for them to show you just how much you owe them every single time. It actually makes a massive difference when you're looking at payment efficiency, obviously, which is how you manage your cash flow and your credit limits with a particular vendor. And so I will tell you, even the most technologically advanced small startup that has very few bills double pays Amazon. It's a very common occurrence. Just a really simple example. If you're a large company, you get multiple shipping invoices in the same PDF. You get within your contract manufacturing, you might get the BOM in several locations in the same document, and then attached to that is going to be the invoice. So duplicate, overlapping, and cumulative invoices is massive. Accidental surcharges is obviously an area for improvement. But I think the thing to really take away from this poll, just from the people on the call, that's really exciting to me is all of these are problems, right? Some of you even said all of the above. The reality is this, from a distribution curve, this is actually pretty tight. And this is what we see. It's overwhelming. This is why I say, Serenity Now, just like, let's all relax and calmly think about how can we possibly solve all of these problems instead of just solving a single issue, which is what led me to try and find a product for my last company originally. The thing that we can all understand is that with a large company that's scaling rapidly, it is mathematically impossible for you to hire enough people to solve this problem. Automation is literally the only way you're going to solve these challenges, because you can always dedicate resources to a single problem, but this is no longer global trade at the $100 billion range is no longer a human scale problem. And so that's what we talk about when we talk about automation. So here's how to buy automation. Here's how I thought about buying automation technology for my last company. And I actually went out and tried to buy the actual companies themselves. And I did a deep dive and a review on several of the leading companies in the space and decided not to because of these reasons. So there are kind of three categories of these companies. The first, BPOs, everybody's very familiar with BPO, tends to be error prone. They basically perform what is called a light pre-audit. So that's your two-way and three-way match. And they, for the most part, they just try to nail that upfront stage because they need to make sure that you're paying approximately close to the right amount before you pay your vendors. And it usually prevents a low percentage of the total errors that are in an invoice, but they can't spend any more money to actually address every last little problem. And the pro, though, is that they charge you a fixed cost per invoice usually, which is great as a financial person. You understand exactly what your costs are going to be as you scale your business. Payment networks, vendor lock-in, inherent bias, 1% to 5% variable cost. In fact, you can't technically, mathematically audit them and the bill that they send you without subsequently auditing everything you sent them to audit and pay. Plus, they get paid on a variable cost of your invoice value, which means they don't care if you pay more because they make more the more you pay. But you do get payments out of the box. So they charge you a very small amount of money for invoice reconciliation, and you usually don't get the data back in an API addressable format. Programmatically addressable format is what we call it. And then finally, contingency. Contingency is like a really cool concept. You pay no money. You give me all of your invoices. I'm going to go out to all of your vendors and ensure that they're compliant. But what that really means is I'm going to get the low-hanging fruit first because I'm doing this with humans, and I'm not going to spend more than I absolutely have to in order to capture the bulk of the low-hanging fruit, and then I'm going to charge you 25 to 50%, somewhere in there, of the recovered costs. The recovery times take a very long time. In the shipping world, sometimes they can take up to 9 months. And so you're basically guaranteeing that you've already overpaid a vendor before you ever get to recoup that cash. And but the pro is no money immediately out of pocket, right? It's just not the most efficient solution if you can afford it. So what I wanted personally, was something that audited in a deep, full forensic audit every single invoice before it was ever paid to a vendor. And that means a lot of work, a lot of effort. And everyone told me the same thing. They said, it's too bad we can't do it. We manage the thresholds, we manage the rules, and we simply can't provide a full forensic audit because it requires too much human effort to do. So we're speeding things up here a little bit, and I'm sure I'm going to get a lot of questions on that. But the thing I'd love to ask.
There is a question that's coming through. We just talked about how do you buy it solution. I love that slide, very clear, detailed around the different things you need to look at. The question's around who's typically involved in this AP automation acquisition process.
Yeah, so we find that the champion is usually someone as a director or controller in the space, somebody that's really feeling that pain, that's really hurting from the need to make sure that they're paying the vendors the correct amount and that they're ensuring that they're not hitting credit checks. So they're definitely involved. They're usually a big driver of the change. And then depending on the size of the company, the CFO or VP of finance, could be a corporate controller, depending on the size of the company, gets involved. So for our customers, they're CFO signed deals. And that's because the CFO is really getting the ability to say to the rest of the organization, we're basically capturing free cash flows because we're never overpaying our vendor in the first place. So that's kind of like the two parties. And then finally, IT and technology are really important because it is ultimately their ERP system that we have to pump the data back into to ensure compliance and accuracy and truth. So it's kind of a three group approach.
Very helpful. Thanks so much.
So does your organization leverage AP automation technology right now? This is a great question for us to understand kind of how savvy your teams are currently and potentially what you're looking to do in the future. So I'll let everyone answer that poll question here. And give you a couple more seconds here while I take a quick tea break. So what we're going to talk about now is, and by the way, I think this poll result's great. It's actually really common. Usually see somewhere a 50-50 split or just people aren't sure what to even call AP automation at a certain point because they know that their lives are still very difficult, even though they purchase software. So I think that's a pretty common occurrence as well. So we're going to jump into kind of how buyers should think about this, what the actual checklist looks like. And all this is available after the fact, of course, through SSON, which is great. So you can understand kind of how we think about the various components. So I think the first piece that you need to think about is stage one. Do we just need pre-audit? Does the vendor provide post-audit functionality? So pre and post means you've already, before you pay the vendor and then after you've paid the vendor. What we've done at OpenEnvoy is we've actually made those irrelevant. We do a full pre, post, and secondary audit before you ever pay your vendor. But you need to think about that in terms of your vendor and what sort of functionality you need, because there's obviously a cost associated with that. Ease of use. You should be able to click to share nowadays. I mean, it should be as easy as Facebook sharing an article or something like that. The fact that you have these big legacy enterprise systems with supplier portals and all this sort of stuff just really isn't necessary anymore. That's very sort of a legacy artifact. And so now you just need to think about how quickly can you get your team up to speed? How much is change management going to cost you? And it really should cost nil, next to nothing. I mean, you should be on a weekly training cycle with their customer success team, but outside of that, it should be very, very easy to use. And then flexibility. We actually named the company OpenEnvoy because we wanted it to be flexible. You can leave at any time. You want all of your vendors to kind of have that attitude that they're going to provide so much value that you don't want to leave. But it should be really easy to get your data out because it is your data. It is not theirs. And if you use a contingency firm, they treat it very much like their data and not yours. And so that's one thing that displeased me about the space. Is one of the reasons we started OpenEnvoy and even called it that. And then finally, the budget. I believe in extreme ROI as quickly as possible, and I'm sure a lot of you do as well. So extreme budget within a 3 to 6 month time frame. That's just brass tacks. And it should allow you straight through processing instead of that chaotic sort of space that you've had in the past, which means clean data, 100% audited, and fully integrated.
I think extreme ROI got everyone's ears up, and now we've got a couple of questions here from the audience. So there's a question around what differentiates AP automation from AP technology. What do we look for? Added capability?
Sure. I mean, AP technology could just be anything that stores record, that processes a payment, that manages team members' access to payments, et cetera. AP automation is something that makes decisions on your behalf. So instead of just recording data and being able to track and look up data, you're actually able to execute on that data or have a system executing on that in real time in parallel with your other activities. So with AP automation, you go back to doing the job you were probably hired to do and not the job of, manual data entry. In my opinion, that's my opinion on the topic. So prove it. I said extreme ROI. I mean, the solution should pay for itself within 3 to 4 months. And if you don't have a vendor that's committed to providing you that level of ROI at that speed, you've got the wrong vendor. I mean, as someone who's tried to buy these solutions in the past, I've seen every pitch and they all say, 12 to 18 months or 12 to 14 months turnaround, and that's just not good enough anymore. Technology is advanced. Your cash flow return should be immediate. These solutions need to be preventative, not reactive. If you're waiting on a reimbursement check from a vendor, that means you've already overpaid. That means you've failed to service your cash flows correctly. So it needs to be preventative. And you need to be able to scale your business without linear growth in your headcount, right? Your team's fine the way they are. They should be able to process billions of dollars in trade. And if they're not with a new solution, then obviously that solution has failed you. So that's my attitude towards all of this. I take a pretty hard line on ROI. We are ROI obsessed as an organization, and we build it into our contracts, actually. So
we also, we're talking about extreme ROI, and can you talk a little bit about how many hours per day an AP team could save with this type of solution?
Yeah, that's a great question. I've got a bit of a use case study on that, but I think it's very important that everyone understands. it is very typical for someone to spend 8 hours resolving the disputes on a single package of invoices. So that package could be from a single vendor, right? We talked a little bit about duplicate invoices as an example, which is an area that a lot of people were having a problem with. It's very common to spend 8 hours on that, and then plus a lot of wait time just waiting to hear back from the vendor. So you've got, maybe $600 in hourly costs sitting there and just that single invoice. It takes around, I think the last article that I read, it takes around $10 to $15 to process an invoice manually if you go through completely from contractual compliance down to the service of work delivered or statement of work delivered. It's a great question.
Cool. Thank you.
AP automation should save you anywhere from 25 to 50% of that right away. Right? If it doesn't, then no, not the right vendor. So I think there's a lot of excuses for why not to adopt something into an organization. Historically, it's been because of vendor lock-in. But the reality is if your solution takes a long time to integrate, it's probably not your IT team's fault. Usually finance is always complaining IT is not fast enough, IT is not doing this and that. The reality is usually it's the vendor's solution is not made with modern tech, it's made with legacy tech. It should be nearly invisible once you deploy it. You should really only be managing to exceptions at that point and never worrying about things that automatically match. And then supplier access, again, I said supplier portals are a thing of the past. The more I hear the word supplier portal, I'm just like transferred back into the late 90s when I was working for large companies like Caterpillar and Canon. And the reality is systems nowadays are collaborative by default. And if your system is not built with collaboration as a cornerstone, you need to kind of work to think about if that's going to generate the long-term ROI you expect. So I'm going to give you real data. This is an actual case study from a customer very quickly. We removed 50% of their financial operational workflow, financial operational costs within the first 3 months is what this says. In fact, I think it was a little bit less than 3 months of using our platform. So that is their team going back to doing the things they were actually hired to do instead of manual data entry or correcting OCR templates or things of that nature to get data into their ERP system. And we returned a 19x cash flow ROI in 90 days. The system paid for itself 19 times over within 90 days. And if you're not seeing 10x plus, like 10x is completely reasonable. This is a pretty extreme example. 10x is completely reasonable. If you don't see that within 90 days, 90 to 120 days, the wrong vendor. Quite simply, the wrong vendor. We need to hold vendors accountable to a much higher ROI in this space. It's something that I was very frustrated every time I talked to a salesperson in this space before when I was trying to buy this type of software. I heard 3x ROI within 12 months and things of that nature. And honestly, that's just not good enough for modern technology. Just absolutely not good enough. So we build it into our language, our documentation, our customer success people track against it, our dashboard reports against it. But the thing is, you should never have to worry about duplicate invoices again. Immediately that frustration is gone. And if you're not getting that from your vendor, you should really expect more. Hold them accountable to that. And this is for billions of dollars in goods processed for this particular customer. This particular customer is one of the largest ag producers in the world. So with that, happy to answer any more questions. I know we're a little over. Hopefully, people got a lot out of that. But I'll leave it to you.
Thank you, Matt. We're a little bit over, but we have a lot of questions and we have lots of people still on the line. So let's get through a couple more, if you don't mind hanging in with us for a little bit longer. And I don't think we do. All right. So this question is around, I have a small team. How much time is realistically involved in deploying an AP audit solution, and what does the onboarding process look like?
Yeah, so for OpenEnvoy, we work with teams that are small and just overwhelmed. So that's a pretty common question. Usually the way that it works is you've got about your 1 hour a week in terms of training and making sure things are going smoothly, right? Just through the first 90-day deployment process. And the second thing is your AP team can send over documents, at least to us. And I think you should just think about this generally. You should be able to just send a deluge of information to your vendor and have them sort it out. You shouldn't have to answer a lot of questions. These documents are fairly commonly understood. If not, it may be an example that your vendor's just not super experienced with this particular problem set. And so yeah, it really shouldn't be a lot of time. You should be up and running and getting invoices audited within a few weeks for any one of these systems, depending on, of course, the complexity of your ERP integration. We've done legacy ERP integration. I mean legacy, like green screen ERP integrations within 90 days. So it's achievable within a very short period of time.
That sounds like some impressive benchmarks. Another question here around how long did it take to build your system?
Yeah, well, it took the pain of 8 years of my previous company and learning kind of all of the tricks of the trade. Obviously interviewing many other vendors in the space. I actually, the question for me was buy a company and use that, but I just couldn't find any tech that met our demands of being able to do this in a preventative way versus a reactive way. And so it took us, we were live, we launched started the company in July of last year, so 1 year old now. We were launched in November and we'd processed $2.5 billion in trade by like February of this year. With large companies. The differentiator for us is the system. We knew how to build it in the first place. We have backgrounds in computer vision, which helped. So our entire engineering team does. And then the second component that helped is that we were able to source test and training data very efficiently from the information that our customers, who were our kind of launch partners, helped us with. So for us, our time to market was very fast, but that kind of belies the fact that we had already spent 8 years doing this sort of thing, 20 years doing computer vision research.
That's great. Well, congratulations to you. And I love the name of the company too, OpenEnvoy. And it's always helpful when things are built off of years and years of experience of knowing what's good and what's bad. We do have another question. When auditing freight invoices to the penny without a common threshold, such as $5 or $10, what automation is available for disputing invoices?
Yeah, so we built a workflow tool around disputes to help our customers dispute only the exception cases. There are, of course, thresholds in that. In freight invoices, you have rebate structures in place. And so we don't want to prevent you from enabling those rebate structures for a variety of compliance reasons. And so I think the first step was understanding being able to extract all of the information from the invoice and match that to the underlying rate card. So with OpenEnvoy, at least, we take every rate card that you have from every different shipping line, and then we run a calculation against that, which gives us to the penny matches. Also, we handle currency fluctuation and destination charges and things of that nature. And so that allows us to hit, penny level accuracy. Then it shows you only where there's been a discrepancy. So there's usually, 5 to 8% error rate in that particular space. If you're talking about international shipping as an example. And so on that error rate, that's a massive cost, right? Because those bills are not cheap. And so you want to be able to track those down efficiently. So we have a way of collaborating with your vendors, so the shipping lines directly in the system as well, which reduces your dispute resolution timeline significantly. That way you're not handing it off to a third-party team as well, so you keep that leverage in your contract negotiations, which is what you lose if you use a contingency firm. You actually end up having to rely on the contingency firm for vendor negotiations the following year and tender rate negotiations the following year. So with that, you actually, with OpenEnvoy as an example, you retain all of that leverage in-house.
Thanks for that. Can I throw one more at you?
Yeah, please.
All right. So how should organizations consider OCR technology-driven products versus intelligent document processing or other AI-driven products?
Yeah, they're kind of all similar in reality. I think the thing is, was your AP team, did you hire them to learn how to build templates and draw boxes around images, or did you hire them for other strategic purposes? And if you hired them to draw boxes around images, you might be overpaying. And all the OCR tools require that you draw boxes around images. So with OpenEnvoy as an example, we do a full extraction. You get all that data back via API if you like, so you don't have to have a separate OCR tool. But more importantly, what's really interesting is you don't have to have new vendors set up. And so I think if you're adopting an OCR technology, $100,000, let's say for an annual license to a really proper suite on OCR, then you're building templates, you're QAing those templates, and those templates, the best they can possibly do on mathematically on an ROC curve is what it's called, is about 97, 98% accuracy. And 2 to 3% of $1 billion is still a decent sized number. You probably want to be more accurate than 2 to 3%, which means now your team is not just an AP team, but they're a quality assurance team for the OCR technology. And so we actually manually human QA every single piece of data that comes to the system because we're part of the financial workflow. And so if you're looking at OCR tools, just remember that you are the product in that particular case, and you are the QA team, and you are the one sitting in between the data and the payment, which is just something you have to think about in terms of risk and identify whether or not that's worth the reward for your organization.
Oh, thank you so much for that, Matt, and all of the great tips from this presentation. Really great. And rapid ROI, no one's going to forget that. So I do encourage you, because there's been so many questions. Unfortunately, we're out of time. Please do connect directly with Matt. I have put his contact details, a link to his LinkedIn profile on the console. He's happy to follow up with you directly with any other questions. I've also placed some resources from OpenEnvoy in the Resource Center. And so thank you. This has really been a tremendous presentation. I want to thank you for being a sponsor of this event too. The SSON really, really appreciates it. So with that, I want to thank everybody for attending. It's been another great day. We are going to kick off tomorrow morning at 9 a.m. I'm actually hosting a session on SSON analytics. We're going to go through some recent AP benchmarks and trends based on off of our latest top 20 study with the most admired shared services and global business services organizations in the world. So data-rich session. I'll take everybody through a little demo of those latest results. We're going to move on to a panel around the latest in AP payment digitization. And we've got another great presentation from Bank of America, Coupa and Sunoco, talking about really the future of AP digitization. So we will see you back here tomorrow morning at 9 a.m. Eastern. Again, Matt from OpenEnvoy, this was a tremendous session. So thanks a lot, and I hope everyone has a great rest of their day. Bye.
Thank you.